Hi everyone, I'm Matt from Look Into Bitcoin, and today we're going to be looking at whether everyone is currently trying to short Bitcoin in anticipation of lower prices. To do this, we'll be using a number of resources, all freely available on lookintobitcoin.com, your number one source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now we're just on the Bitcoin open interest chart on lookintobitcoin.com. And what this is showing us is the current derivative interest across multiple Bitcoin exchanges. Try and gain some insight on how much leverage and how much general retail interest there is in the current Bitcoin price. And what we can see is the Bitcoin open interest, which was on a very steady rise for a number of months, has taken a very sharp decline. Now, a lot of this may be due to the fact that the current open interest on FTX is currently at $0, and this is due to their insolvency recently, wiping out a lot of traders and unfortunately resulting in large losses across most of the cryptocurrency market. Now, how does open interest really relate to the Bitcoin price? Well, when open interest is increasing, it means that a lot of people are taking derivative leverage positions. Now, this may be trying to increase their exposure to more price action movements to the upside, or maybe taking short positions, which is betting on the price decreasing in Bitcoin. So what we can do is use this open interest as a gauge of expectation of volatility, because this on its own doesn't necessarily tell us whether the current sentiment is a majority of traders betting on the price increasing or decreasing. All we can say is that this is showing that a lot of people are trying to increase their exposure in anticipation. Now, we can often see there is a correlation between open interest decreasing and price decreasing. This is because a majority of traders are often taking long positions on price rather than taking short positions. But with this open interest, we can also see USD denominated and BTC denominated derivative contracts. So rather than using USD as their collateral when taking out these leverage positions, we can also see when people are actually using their BTC as the collateral for their derivative positions. And we can see this is a similar story. It was on a very steady uptrend, but not quite as correlated with price, as this isn't necessarily taking into account the underlying price of Bitcoin if people are using Bitcoin as the collateral. We can see even after this large, stark decrease in price, the open interest has decreased substantially, even before the FTX open interest reached zero. So we can see a lot of traders were actually wiped out by this move, which likely leads to the situation that a lot of people were taking long positions before this recent crash. What we can also do is go to the Bitcoin funding rates chart. Now, rather than just telling us the current open interest, the current open volume of derivative contracts, what we can do is use this Bitcoin funding rates to try and actually see what positions most traders are actually taking. Because of the way Bitcoin derivatives and especially perpetual contracts work, users have to pay funding at set intervals. This may be every 8 hours, which is the most common one, but as low as every hour or sometimes every 24 hours. Now, this funding rates are being paid to keep their positions open, as these perpetual contract derivatives don't actually trade real BTC. They're trading a derivative. They're trading something that's trying to mimic the price of Bitcoin. But when this mimicked price, this derivative contract, have a discrepancy between their actual price and the underlying price of Bitcoin, this is where these funding rates come into play. We can see when there's a positive funding rate, this shows that the perpetual contract, the derivative, is actually at a higher value than the current spot price, as more people are trying to buy, more people are trying to long the asset. So a positive funding rate actually shows us that a majority of traders are taking long positions. What we can also see is when it's negative, it means a majority of traders are taking short positions or betting on the market going down. So on this Look Into Bitcoin chart, we can actually isolate by exchange and even again from USD denominated collateralized derivative contract to coin collateralized derivative contract. So this is people, again, using BTC to gain more exposure to the market rather than trading against the US dollar. So we can see this shows a much truer representation of the current funding rate. And we can see after this collapse in price from around $20,000, $21,000 to as low as $15,900, the funding rate went extremely negative. Now, this shows that a huge majority of traders were actually betting on further downside in the Bitcoin price action. And right now we're getting a lot of chop and a lot of people flipping their directional bias on Bitcoin. Now, how can we use this information? Well, we can see historically, whenever there is a sharp decrease in the funding rate and a lot of people bet on the price going down, this shows us that there usually is a bounce in price incoming, because a lot of traders are often, unfortunately, wrong in their directional bias. So when a majority are doing one thing, it actually pays to take a contrarian stance and try and bet on the other thing happening. So we can see multiple examples throughout Bitcoin's price history whenever we get these black swan events, or whatever you would like to call them, where we see these huge discrepancies in funding rates, these extreme values, either to the upside or the downside. That is usually an indication of a market top, or in this case, what potentially could be a market bottom. So just to summarize, by analyzing the derivatives market for Bitcoin, we can gain insight in the current direction the majority of traders are betting is next for Bitcoin. And following the events surrounding FTX and the negative impact that had on the Bitcoin price, we can see that a vast majority of traders at the time were taking short positions on BTC. That means they were betting on further downside. But what we can also see is historically these extreme funding events mark potential turning points in the Bitcoin price. Incredibly negative funding can often mark a price bottom, and vice versa for positive funding rates. So an extremely positive funding rate can often indicate that the market is topping out, as too many traders are betting on the price increasing even further. So this is a great contrarian tool to add to your arsenal for technical analysis. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live chats, in-depth newsletters, indicator alerts, private trading view scripts, and more, all for a fraction of the standard industry price. Also, if you'd like any more clarification on the definition of anything we've discussed today, on the Look Into Bitcoin site, on all of the charts mentioned, you can actually scroll beneath the chart and see a little bit more of the maths and calculations behind everything. And please let me know, are you currently shorting the market, or are you taking a contrarian stance and actually accumulating or potentially taking leveraged long positions with the current Bitcoin price action? Let me know in the comments down below, or on Twitter at LookIntoBTC. I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.